one of the questions that comes up is, well, why don't we use the Qs? So I've mentioned before that in the market analysis that I do in Sensor, you could just trade the Qs around that, because I'll give you enough information around, the uptrend, downtrend, this, that, potentially when you can be in, when you can be out. But this one, I think we would focus on the SPY. And one of the reasons I would focus on the SPY is it's the most liquid of all the indexes. So liquidity is not going to be an issue here. And it's got a larger number of stocks, 500 versus 100 in the Qs. And whereas the Qs is more tech centric, this one's a lot broader in terms of sectors and diversification. So all in all, this makes a much better pick if you're going to go down the indexing path. And right now, I mean, as of today, if I was to fill this out in a grid, in today's term, you wouldn't be in the long. There'd be no position in the long right now. There'd be no position in the intermediate right now, and you would have traded the near term, and you would have exited. So as of this weekend, you'd be at no position. So today, if we were just looking at today's holdings, all three portfolios or all three strategies would be sitting in cash. So, and then the other thing is, so I'm still kind of mulling this over, right? And one of the suggestions was, well, there was a couple of inquiries say, hey, can I follow along and this, that, and the other. The problem with just sending out an email to a number of people is they may not pick it up or whatever, and they may have questions or whatever. But and then if you're gonna make it, and then there's no control over it. But so then if you're gonna make it available for free, why not just stick it up on YouTube? This is the other suggestion. I haven't used. I've deliberetely up to now, I haven't really considered YouTube because I've kind of shied away from getting into any of that stuff. But it's become a compelling discussion with a couple of people. So I'm actually looking into it to see if that's something I might want to do. The downside of going down that path are then you are obligated to put a video up on a regular basis to let people know, and then if there's a change, like if you for the near term plan, hey, I'm exiting my position, you need a little video to go up to tell people that. So that means they would have to subscribe and set an alarm and all that kind of stuff, which is all there on the YouTube platform. So that's kind of where I'm at. I mean, I've really been looking at this for a long time, and I've got multiple indexing strategies. With this one, I'm trying to simplify and make it all weather to both sides of the trend, with a view to seeing, okay, how can you consistently beat the benchmark, beat the retail investor returns, and put yourself in the same group as this 4% pro group. So that would be the attraction. The other thing I did was I looked at what the returns are if you did, so let's say you put into the S&P and you matched it. So if you put in, let's say you put in 100K portfolio over a 20-year period, and you matched it, and let's just assume for calculation the return was the long-term return is 10%. So if you match 10%, then your 100K on a tie goes up to 600, something like 620K over a 20-year period. So that's just your initial investment. After 20 years, goes to 620K. And then I looked at, okay, so if you had outperformance, what does that look like? If you go to 2 years, or actually, if you just beat by 1 year, I made a note of this. So if you just beat by 1 year, then you would get, so like not 1 year. If you were to beat the 10% by just 1% every year on average, right? So you're getting 11%. Then your return same time period goes above 800,000. 2% outperformance. Again, this is using the base of 10, which we know it's going to be challenging. 2% would get you to about 960,000. So big difference now. That's like 50% more than just an extra 2% over the 20%. Yeah, it gets you a 50% greater return. But if you were to get 3% outperformance, then your 100K in 20 years time goes to 1.1 mil. So this would be the target that you'd want to set. And the activity wouldn't be that much more. But 20 years is a long time as well. But then you can see how this is doing on an annual basis, and every 6 months, how things are tracking and all that kind of stuff. So it'd be good to put into the leaderboard, which means I need to eat more vegetables, more salads, more fish, so that I can be here in 20 years' time. So thoughts? Everybody bamboozled? Or
I like it. Idea. What would you do? Follow IBD's recommendations when the market's in an uptrend to be in, and when they're facing a downtrend to be out, or how would you get in and out?
So that would be all based on the chart of what's going on. Not just the chart, it'd be based on lots of things like macro, the macro picture. So what this forces you to do is really understand the market, the actual market, and what's going on in the economy a lot better, the geopolitical events, because you'd want to, and then you want to act on. So once you got to know the backdrop and the context of what the type of market you're operating in, and then you would use price and volume action, because when to be in, when to be out, how to manage your risk, and all that kind of stuff, right? So I wouldn't be following any proprietary. I mean, if you want to simplify things, you could just follow their calls and say when they call it into an uptrend, buy, and when they call it into a downtrend, sell. But we've back tested that, and it's hasn't proved very fruitful.
Would you consider extending this technique into sector rotations? In other words, let's say right now energy is, you got a good rotation into energy right now,
Yeah.
And it'll rotate out. So you'd pull your ETF out of energy and go into the next one that's rotating in. Is there any thought along those lines?
Yeah. So those are that's a good question. So those are what I haven't touched on that yet. Actually, things that I'm calling force multipliers within the system, right? And so one of the force multipliers is exactly that. It's periods where a particular sector, so this goes back to a bull market somewhere, right? A particular sector is outperforming the index and trending, on a trend basis, like energy is now. And then instead of being in the SPYs, you could be in XLE, for example. So definitely, and there's a whole bunch of things I've got in the system method that not kind of let's just say it's in the black box for now because it'd be too much info for people to take on.
You may have said this when you were talking to the other guy. The in and out rules, would they be pretty specific, or they're not like Kenstone in and out rules? There'd be something else.
Yeah, it'd be different. Yeah. Mm-hmm. Yep, I would. Like if there was an event, I would just upload a video, and those videos I would limit to. And the other thing is, these aren't going to be long videos. Once this is up and running, 2 minutes. For most of them would be a quick 2 minute majority of time. And if there's an update into a week because something happened or a signal triggered or whatever, right? Then an intermediate video, again, 2 minutes. So the weekend video might be like 4 or 5 minutes, just to cover what the market price is looking like on a price basis. And then after that, and just to cover each of the 3 views, long, medium, short, to say, are you in, are you out, whatever. And then look at the maybe the portfolio returns on a quarterly basis, or maybe that's upload a video at the end of the month and say, this is where we are, this is how we're looking comparatively to the S&P. So that'd be a lot of work, but if the videos are limited, I don't know what the mechanics are to upload and all that kind of stuff yet, and I certainly won't try and make this into a high quality production. It'll just be the kind of videos that you've seen. So if they are okay to be accepted by YouTube, then I can just take a quick video, upload it, and then you guys can set the reminders there yourself. And then as soon as it's uploaded, you'll get a ding or whatever, or alert saying there's a new video, and you can just watch it. And then the other thing I would do is I would probably post the weekly one on a Saturday. So you got all weekend, or you got quite a bit of time over the weekend to take a look at 4 or 5. And the other advantage is everybody's got smartphones, so you can just bring it up on YouTube on your smartphone, and you can take a quick look while you're checking out at the grocery store. So there are some upsides. It's not sure what I'm trying to understand why I've been reluctant to stick this up on YouTube, because it's there are definitely user-friendly advantages to it. It's just not user-friendly to me because it creates more admin for me. And I won't charge for this. I just do it as a giving back, giving something back. I actually set this up for my kids so they can follow it. And some of my friends back in England, my school friends back in England, so they wanted something as well. They can't join Sensor because the time zone differences of 8 hours. By the time we have it, it's like 2 o'clock in the morning over there now.
Definitely like your idea.
Well, it's at the right price, isn't it? Free is good, right?